SBI's GTM Value Creation Corner podcast with SBI CEO Mike Hoffman hosting. Each episode is an unscripted conversation between Mike and a GTM leader, expert, or practitioner about what's on the minds of executives, latest market trends, and SBI research and insights. Mike is joined today by Kroll CEO and SBI board member Jake Silverman. With 25 years at Kroll, Jake has an expert perspective on value creation. The two discuss the role of top-line growth and value creation and contemporary topics on the minds of CEOs, including the real threat to cybersecurity.
Good morning, Jake. How are you today? Good to see you. Welcome to the show. How I'd like to start out, and I start this out with every guest, is we'd like you to introduce yourself because probably what people heard is, hey, on this week's show, we're going to have Jake Silverman, CEO of Kroll. So if you can give a little bit of background on yourself and talk a little bit about Kroll.
For sure. Thanks for having me on. I'm Jake Silverman. I'm the CEO of Kroll, as Mike just said. I have been with this business for the better part of the past 20 plus years. So that is by far a long stretch, the longest professional stint of my life. The prior ones were measured in certain cases in months. So finally, I stuck the landing when I got to Kroll and its predecessor incarnations, and I'm happy about that. We have been in the business over the past 20 years of providing a whole host of services that relate to managing risk. Governance and risk is really how we think about the key themes that we cater to, and we have historically done that through building out a professional services environment, much like SBI, and increasingly, much like SBI, we've been embarking on much more of a technology-oriented journey to complement the insight and advice that our now over 6,000 consultants give around the world. So that's a snapshot.
That's great. And 20 years, congratulations. I think in Reid Hoffman's book, The Alliance, which we subscribe to as a company, that would be called the foundational tour of duty. You're all in. And have done an amazing job of guiding Kroll. So congratulations on a great run.
Thank you.
So I want to talk a little bit today, Jake. So you are also a mentor of mine as well as a board member of SBI. So I always get good perspective from you. I want to talk a little bit today more about you than about me, because I think we spend far too much time on me and how you think about things. And I want to start with how you think about top line growth and its importance to value creation. And I ask that because some people might think, oh, duh, like, well, of course it plays a role in value creation, but there are companies where it doesn't. There are companies out there where it is about how do we manage cost, and it's a turnaround. But I'm assuming at Kroll, top line growth plays a role in value creation. So I want to hear a little bit about how you think about that and the role that it does play at Kroll, because you're a much bigger organization than SBI.
Absolutely. So, it might sound like a truism, but it is worth peeling the onion on it. At the end of the day, I think that top line growth is the core to what I would call long-term value creation. At the end of the day, cutting costs and managing turnaround situations absolutely can create value, but those are step function moments in time that can either recover or create short-term value. And the question is, how can you sustain that? And ultimately, this is the ability to sustain is dependent, I suppose, obviously, on one's ability to grow revenue. I think what really becomes more relevant when you think about it through that frame is really to what degree. Growth in certain industries can be measured in double digits and be viewed. Sometimes that can be viewed poorly. But people might be looking for high double digits, if not triple digits. Certainly back in the go-go days of the bull market. Other industries, you might be measured in the low single digits, and that would be viewed incredibly positively. And it's industry and cycle specific, I think, and you have to definitely look at facts and circumstances. In this environment, and I'm sure we'll talk about macro at some point during this podcast, I think that people will still place a premium on growth. Certainly investors will, but there will be understandably, a heightened degree of skepticism about one's ability to sustain whatever level of growth you're putting out there.
We're going to get to the skepticism in a minute. Now, I'm going to share a story, but that's good.
Yeah, for I imagine. So at the end of the day, long-term value creation, I think, is fundamentally driven by sustainable levels of top-line growth, keys to whichever industry and peer group you think is
helpful. And again, I promise we're going to get to the skepticism in my own experience with you being a good coach in that area. But when you think about growth and you're approaching a new fiscal period or even a new quarter, what are the broad categories that you think about? And how do you think about the levers of growth?
Yeah, so I can speak just from our experience as a professional services organization, and there certainly might be other levers that are different or analogous, depending on one's business. But in our case, depending on, again, the macro, which I know we'll get to, the key for us is our ability to further penetrate our existing client base. And given the fact that we are increasingly developing our brand and our presence in the marketplace to be one that is selling a solution as opposed to a point-specific product, the ability to expand out the product set within an organization, I think, is key to our growth. So that's certainly one element that we think a lot about, the idea of landing and expanding, which is key to us. Secondly, to the extent that the market is ready for it, our ability to attract talent to execute on live business. That is less acute right now, just given the fact that labor markets have slowed down, particularly in the professional services world. But in prior worlds, when you're operating at high utilizations, the ability to add that incremental dollar of revenue is dependent on your ability to add that incremental point of utilization or FTE in our environment. So that's certainly number two. Number three, for us, and I would think for many ambitious companies, the ability to identify I'll speak about this from a U.S.-centric lens, the ability to add non-U.S. opportunities where markets might be less developed has certainly been core to our growth. People often think about pricing. In our case, pricing is a tool, but not one that I think is, at least for us, has been an area where we have been able to create step functions of growth. We're careful about pricing. Sometimes dialing up price can be helpful. Sometimes dialing down price can be helpful. And at the end of the day, I'm actually not a pricing expert, but that's probably one that is more middle of the pack for us. Lastly, and it probably wasn't core to your question, which I perceive to be more about organic growth, our business has been one that has, I think, created value through inorganic growth opportunities and our ability to thoughtfully identify and purchase industrially logical business. If that makes sense.
Yeah, and I was gonna ask a little bit about that because I think it's almost overarching. So there is an opportunity with M&A to fall into multiple categories. In some cases, you're going to get talent. In some cases, you're going to get additional client penetration. You may get a new practice area. So I think that is key. And and then the reality is, once you do that M&A and add it as part of Kroll or part of your organization, after that it is about organic growth because you're going to have to grow. Now it's part of the organization. You're going to have to grow that going forward. So I think that that's overarching. Do you and I know there's been an evolution at Kroll in growing out the different practice areas. How do you think about that from a growth perspective? Is that a little bit more of a risk, a risky adventure, or do you stay close enough to what you currently do that it just becomes sort of a logical expansion?
Yeah, I mean, we have thought about our service line expansion or practice area expansion really through the the lens of who the buyer type is that we've historically dealt with our core services, which might be financial advisory services like valuation or risk management services like investigation and litigation support. And in general, the buyer types for us have been CFOs or general counsels or senior risk managers or their advisors. So to the extent that we find practice areas that still cater to that set of constituencies that are not what we currently do, we will certainly give those a hard look. But we have to feel a compelling argument about how we can bundle that or integrate that expanded practice area into our offering to that.
And what do you have more of a willingness to bet on, Jay? Service line expansion, and you know, if you think going into next year I could do service line expansion, or I can do organic scaling and add, you know, additional partners that have domain expertise in the area I have. How would you prioritize those? Okay.
That's all right. Sorry to be flippant about it. At the end of the day, particularly if you're a more scaled business like we are, both aspects are core to our growth, and what we fundamentally look for are people that we have confidence in to bring on new work. There could be some very exciting conceptual practice area, but if we can't find the right person or team to execute against that opportunity, we won't make that bet until we find that person. And there might be different key dimensions with regard to what we might be looking for. It might be the ability to originate new revenue and bring a portable book of business, or it might be someone who has a particular area of expertise and competency that we don't have, but where we can provide the distribution through our customer base, or everything in between in terms of a new practice area. But the same approach would be used for someone who's just coming into an existing practice area. Do they bring incremental value in some way, shape, or form? Now, all that being said, the risk of going into a new practice area, unless you're buying a going concern which is already pre-existing, is probably a little bit higher. If you're bringing someone into a practice area that you already have, or a service line that you already have, you've already set up the infrastructure, the brand, the go-to-market strategy, and so forth. And I hate to use this term too often, but there's a plug-and-play opportunity there, which can probably be a little bit less risky.
All right, so the answer is both. Here's where I get back to what you had talked about as sort of being thoughtful and careful about expectations around top line growth, because you are a great what's the right term? I'll call it ballast on the board for me. I don't want to call you a wet blanket because that would be rude as a guest on my show. I'll call you a ballast. So here's what I find. I find that when I am reviewing with other CEOs what their growth plans are, growth strategy, their expectations out of that I'm very good at providing a realistic view. On the other hand, when I have conviction or enthusiasm in a growth lever that I want to pull at SBI, I lose some of the reality. And you play that role in it, and you're very good at it for me. Like, Mike, I appreciate the go-get spirit, but you might want to rethink that in this environment. How do you do that for yourself when you have conviction in an enthusiasm in a growth initiative? How do you balance that with the risks and the reality of the market? So your own self-management, or are you like me and you kind of need an outside to rein you in a little bit?
So thank you for your euphemistic term of the word ballast. I appreciate that, but I know what you mean. So much like you, I need third-party ballast in my own environment. When third party, i.e., someone that's not me. It could be a member of our firm, or a member of our board, or outside, coaching, which I do get and I value. And the need for someone to provide an objective, sober, sometimes skeptical view, and sometimes purposefully skeptical view, I think is critical for me to sort of maintain a level of awareness and sort of sobriety around the world that we're in. Because even though I might play that role for you in my own seat, I get equally excited about growth opportunities and value creation opportunities that I want to pursue. I try to self-check as best I can, but that might not be enough. And even if it turned out to have been enough, having that reaffirmation from someone else.
I think having that perspective, and it sounds like you're fortunate to have some of that internally. I have it internally as well as on the board.
Yeah, I would just maybe add to that having that internal skeptic or set of skeptics, I think is very valuable, but it can create tensions and a more animated workplace and a level of what I hope is always healthy and respectful debate, but debate nonetheless within the company, which I imagine, based on our conversations, is similar to the SBI environment. I, at the end of the day, think that's healthy, but some leaders are less comfortable with that and still very successful. So you just have to find the right environment that gets.
Yeah, and I think, and that's important. It's important. I agree with you. It's important to have that on the team, and you have them. I have them on the team, but ultimately, in the end, there are times I'm sure you say, "Hey, I need to trust my instincts as the CEO, and I appreciate the input, but this is the direction we're going." I'm assuming that happens on occasion.
It does. I think consensus is valuable, but it is not. It's not a requirement. I don't know how else to say it, at least in our organization. And sometimes, if we were a partnership, a true partnership, that might be different.
And then ultimately, the importance when you make that decision that even the people who acted as that, here are all the reasons why this might go wrong. You need them to be aligned and say, hey, even though I disagreed with the direction, now I'm going to fully support it.
100%. And people are not prepared to do that, even if they're quite skilled at their...
That is, and on growth programs that we are a part of, that is actually the one that is, that can kill the momentum of the whole thing. If the executive team does not finally line up and say, we're all on the same team at this point, even though I had disagreement at one point. So from our experience, we find that can kill the growth momentum as much or more than anything else. So teams need to be on board. All right. So I'm going to get a little bit more contemporary now. So here we are in October of 2023. It has been an interesting year, to say the least. So what things, and this can be in general, and maybe you have some things in general you take into consideration, but then specifically to this moment in time, things you're taking into consideration, having your team think about as you look at your growth strategy going into 2024.
So the generic themes are, I would think, the obvious ones: the state of the global economy driven by the U.S. economy, and you can simplify that to just the rate environment. And at the end of the day, there's lots of different factors and things that go into how one thinks about the economy. But fundamentally, I and many others in the world have been focused on where the Fed is going to go, and how high and how long. Right? That's the perennial thing. So to me, that is just an overarching set of questions that at the end of the day are guiding decision-making about capital allocation, valuation, M&A at all, the ability to finance and or recapitalize one's balance sheet, which is just more expensive definitionally right now. And that has certainly put a chill, at least in my opinion, on M&A activity and investment, which presumably was the intent, at least one element of the intent of the Fed's actions to combat inflation. So that's the big thing that's out there, and it is both generic, existential, and very real. Right. And I think about it all the time. Secondly, and perhaps related to that, is the labor market itself, and how to to use the tip four is attract and retain great talent, and reward them in the right way. And that right way might not be at the same level as it was a few years ago. We have to be fiduciaries and ultimately focus on driving not just top line but bottom line growth. So managing our ability to attract and retain talent, but not get caught up in an inflationary cycle, which we were certainly in late 2020 through early 2022. So that is something that we're very mindful of. My general view is that the labor markets have cooled. Wage inflation has cooled, but it is certainly not gone away. And that's something that we're very mindful of. So those are sort of two generic themes. We have, and I guess the third and fourth key themes that we are very focused on, as I think are most businesses, are the disruptive and or productive role of technology, however you define it. Could be, everyone's talking about AI right now, but it's just any form of non-human capital dimension that can enhance or disrupt one's business. So we're certainly focused on how we can leverage technology in a credible way for us. We're not a software development firm. At least that's not the leading edge of what we are, but we can leverage technology. And then fourth, and then I'll get to some more specifics, globalization and the ability, particularly for a large business like ours, to leverage labor anywhere around the world. And I'm constantly amazed at the ability for us as an organization to provide multinational, multilingual, multidisciplinary teams in sometimes at a moment's notice for the benefit of our clients, and that is very, very powerful. So those are four dimensions: just macro interest rate environment, labor, disruptive or productive, the power of technology, and globalization. Going down a level, some key themes that we are focused on, just in terms of protecting the house, are cyber. For sure, we happen to have a cyber advisory practice, which gives us unique insight into the world. But the ability for us to protect the house and to help others protect their houses with regard to cyber vulnerability, it's a question of when, not if. It's an overused term, but that's certainly the case. We will be vulnerable to some form of compromise or attack from a criminal actor or a state actor, or just an anarchist.
Yeah, this is not.
And
So Jake, not a pitch for Kroll, but just a general. I had a meeting with a group of CEOs last week, and the number of them that were dealing with cyber attacks and ransomware and other things, I was shocked at the number of companies that are dealing with that right now, and it was top of mind, and I think, from their perspective, there's nothing that slows down growth momentum more than having to deal with something like that. So it's a lot more prevalent than I thought it was.
It isn't, and it is absolutely paralyzing. So that is one key area that I urge people to focus on. Secondly, even if you yourself as a domestic business, the implications of what's happening geopolitically, whether it's the Middle East, in Asia, certainly China, you just have to be very mindful of it, both in terms of implications for just human safety, implications for cost of energy, data privacy, and so forth. And we are very mindful of how we operate in various geographies and the implications of what's happening in various geographies.
Right, and for our business specifically this year, we're very tech heavy, and both the war in the Ukraine and Israel, which both have a heavy connection to the tech world. So on top of high interest rates and wage inflation, dealing with that was it was a consideration that we had to keep in mind. So that's a good call out.
Absolutely. And unfortunately, in the world that we're in, I could go on and on. But I think suffice to say, anything that one reads about in the headlines of whatever media outlet you choose to read, it has relevance to how we operate as leaders of both small and large businesses. I actually, just on that score, I would also add one theme that we happen to be very focused on here at Kroll is the impact of, both positively and negatively, digital chatter and social media on one's business, on geopolitical outcomes, social outcomes, and the like. And given part of our business is really around protection, that's a key element of our risk management service. Understanding, getting ahead of negative trending in the world of social media and digital chatter is very important. It's analogous to, and actually quite related to,
that's the social side of things and the digital side of things. It can be annoying, but you can't sweep it under the rug. It is a reality that you have to deal with today. All right. Well, Jake, this has been very helpful. Appreciate, as always, the time. I think when we do one of these in the future, we should probably just set up a microphone at one of our lunches, although those conversations might get a little too raw and we'd have to edit out some of that stuff. But as always, appreciate your support, being a supporter of SBI, and your willingness to come on the show today. And we will definitely have you back at some point. But thank you. All right. Have a great day.
I look forward to it. Thanks, Mike.
You've been listening to SBI's GTM Value Creation Corner podcast with CEO Mike Hoffman hosting. Visit SBIgrowth.com to read SBI's latest research, join upcoming events, or learn about SBI's GTM services. Don't forget to subscribe to this podcast and connect with us on LinkedIn.